Why did the market crash, and what do we do now? Should we still invest in crypto? That's what I'm going to be talking about today. Hello, everyone. Welcome to another video where I talk about crypto. Basically, the current state of the market, what's going on, why are things happening, and what do we do? How do we invest? How do we get started? All that stuff you find it here. So if you're interested in continuing to see more content like this, please please subscribe, and just watch my latest videos. I talk about pretty much all of that stuff from beginning to end. How to get started, how to continue to invest, what to do in certain situations. And, you know, it's things that have helped me to become very good at my investments. And I think it's things that'll help other people like you guys to do well with your investments as well. So I'm going to be talking about what's been going on. It's been quite a very depressing weekend, and continues to be kind of depressing because still it's not up to the point that it has been in the past. So what's going on? What are we doing? Why are we here? Well, it's very simple. I mean, it's kind of crazy how things happen, right? Like they just happen from one day to another. But these are things actually that have been going on for a long, long time, and I mean mostly recently, but they've been going on for a couple weeks, months, whatever. Let's get started, right? First thing, there's been a slow job growth since the pandemic, pretty much. It was revealed, kind of like the recovery that we've had since the beginning of COVID, of jobs that have been gained and stuff like that. And the reality of it was way much lower than the expectations. So what does this mean? Interest rates are probably going to start going up, which sucks, right? And that scares the market. That scares everything, right? That scares everything. And that's why we've seen these dips. That's why we've seen these catastrophic losses, right? So basically, job growth in the United States slowed in November with just 210,000 new jobs added during the month, falling well below economists' expectations of 550,000. So clearly a big gap between what actually happened compared to the expectations. Yet the unemployment rate lowered by zero point 0.4 percentage points to 4.2%, which is kind of it's a little bit of a contradiction there, right? I mean, like, how do you have less jobs but also at the same time less unemployment? That doesn't quite make any sense, but well, it is what it is, right? So this is a really big deal. The fact that there's going to be the interest rates are going to start rising again because of the recovery that has been going on. Have we actually recovered from COVID? That's what we're trying to find out, right? And the job growth is kind of what mostly got hit after COVID, right? A lot of people lost their jobs and all that stuff. So, the job growth and how many people are unemployed and are employed, right? That's kind of what determines if we're recovering from COVID or not. So, yeah, that's one of the main things that have happened. There's a lot of FUD about tapering, which is basically it raises interest rates. That's what tapering does. No more printing money, which almost seems unreal or unrealistic to happen, right? As well as the Fed not buying any more assets or bonds or any of that stuff, which also seems unrealistic. And then, of course, the Omicron variant, the new variant that was found in South Africa of COVID, that is supposedly very infectious, as well as another reason. So you see, there's like so many reasons as to why we just had this dip. That's why it was so tremendous of a dip. And that's why it was such a big dip. Leverage traders getting liquidated is pretty much the biggest reason. So leverage trading, for those of you who don't know, is basically people who borrow money from brokers to trade, right? It's margin trading. So they borrow money, it's loans, in order to trade. And once it goes to a certain point where they no longer have they have insufficient funds. They don't have the funds to continue paying for the leverage. Then they basically get liquidated, right? They lose all that money and they're now kind of like in debt, sort of. So that's what happens. So $23 billion were accumulated in leverage trading, right? So $23 billion, which is a large percentage, right, of the holdings in Bitcoin. I mean, it's not that big because you have 1 trillion, only 23 billion were kind of accumulated in Bitcoin, but that's still pretty big, and it dropped all the way down to 16 billion, which means a lot of money. Let's see, what was that? $7 billion got liquidated off of Bitcoin. So that's a large amount of money just being torn away from Bitcoin, causing that huge dip. And so billions of dollars were liquidated. And that's what caused the price of Bitcoin to go all the way down to 42,000. And I mean, in reality, as low as, I'd say that's 42,000. It was 40,000 range to 42,000. Yeah, it was pretty crazy, right? It was a pretty crazy thing. I saw it all happen. It was like 2 a.m. I saw it all happen right in front of my eyes. So it was quite, I wasn't sure what was going on. Why did that just happen? I just saw my portfolio go down like thousands of dollars, and you're like, what is going on? But these are things that we've been talking about for a while now, and I mentioned it even before that dip happened. These same exact reasons. I'm not sure if I mentioned leverage traders, but I think I did. I don't remember. But definitely the FUD about tapering, and once again, if you don't know what FUD is, fear, uncertainty, and doubt. FUD about tapering, the new variant of COVID, interest rates rising, all that stuff. So where are we now, right? Like what's going on now after that huge dump? Well, everything seems to be back to normal, kind of. Misinformation about the COVID variant has, been brought up, and here we have a tweet from a doctor saying the first day of the Omicron wave in South Africa was November 23. It is now dominant in like 75% of cases. If it was more dangerous, we should have already started to see an increase in deaths, but we haven't. They're still falling. It's mostly producing mild symptoms. This is good news. So this is not that big of a deal. The new variant isn't that much of a threat, right? It's like, sure, a lot of cases of the flu, a virus, they're always going to have, people still die of the flu. People still die of a bunch of viruses. But it isn't affecting people like COVID did in the beginning, right? So things it's not that bad. The Omicron variant isn't a huge deal, and it's not something that people should be insanely afraid of. So possibilities of tapering are still pretty low, I'd say. I mean, it's been held out for so long. So we'd probably say it's still pretty low. And they go lower by the day. And the more that this time gets extended, the I think the chances go lower and lower. As well as leverage traders, I think that's pretty healthy for the market. The market was way over leveraged for way too long, and I think that this shakeout of leverage traders is pretty healthy for the market. What else? So what do we do with this information? You guys probably just heard me pass the notes. What do we do with this information? Like, okay, market had dumped. We're kind of stable right now. You see it's kind of like a flat line across the screen. It's not much movement. Like, what do we do now? Well, since there still is like a bunch of uncertainty where we don't know what's like actually going to happen in the next few months, even though the chances are very low of tapering, but the interest rates going up is pretty high actually. But the idea of tapering, so there's like things that are going for, things that are going against, right? So it's very uncertain. But the market has held itself after that dump, of course. We're not going to count that dump. So what I would do, and this is what I'm doing, I started doing at the day right after the dump, right? I'm going to go to a very passive method of investing that I think is actually very beneficial and in the long term very profitable, right? And it's this method called dollar cost averaging. If you haven't heard about dollar cost averaging, it's basically periodic purchases of an asset, so like Bitcoin or any other coin, which I'd suggest probably dollar cost averaging into a more outperforming coin like Ethereum. Ethereum continues to outperform Bitcoin till this day, even after that dump. So that tells you a lot about Ethereum. And I think Ethereum has the biggest upside. So I wouldn't go all in to any coin, right? I wouldn't get into very volatile coins. I wouldn't get into, those kind of safe coins that I mentioned earlier. You could, a very small percentage, right? But mostly, I would encourage you, and I'm not a financial advisor, but I would encourage you to put it into safer coins, probably the top two coins, right? Bitcoin or Ethereum. Now, Ethereum is outperforming, so I'd probably encourage you more towards Ethereum. But if you want to put it into Bitcoin, go ahead, do your own thing, right? But Ethereum, I think, is what I'm investing in periodically, right? I'm putting in a good amount of money every week into Ethereum. So that's how it goes, right? You put a recurring buy. So every week I'm putting in this amount of money on the same day into Ethereum every week, right? And so let's say the market dips, right? So the market dips, I buy the next week at 150. The market goes up a bit, kind of like to the same place. And I'm already making profit, believe it or not. Because I bought that dip the next week and now it's back up to the same place where I bought the first time. And if I never bought during the dip, those 150 when I got back to that place the second time, I would have been breaking even, right? I would have been kind of in the same place. But since I bought that dip periodically, now when I get back to that point, I'm already at a profit. I'm not breaking even. I'm already at a profit. I probably broke even halfway, right? And so another dip comes in. So I buy there. I buy there when we get back to the same place the next week. Then it dips, buy there, dips again, buy there, dips again, buy there. And then when we get back up to the initial point, right, I'm already at a huge profit. And so this is like a little chart, right? Despite all the dips that Bitcoin has had, if you would have invested for the last 6 months, $100 daily. I mean, let's not put daily because nobody would put, unless you're like rich, right? But let's say you put in $100 weekly into Bitcoin for the last 6 months, you would be at a profit despite all the dips that Bitcoin has had. You would have been at a profit. Let's put a year after all the dips, even more dips, right? You would be at a profit. You would have invested total, right? If you were to invest every week for a whole year, you would have invested total $5,300, and now you're at 7,288, whatever, 7,288. So your money has gone up 37%, and you're only putting in $100 weekly. So I think this is a very passive way of trading, as well as a not very emotional thing, right? Because what you want to avoid is being emotional in the market, basically selling whenever it's like going down, and you're like, oh my goodness, shiver me timbers, right? So you don't want to be emotional. This kind of takes out the emotion. This says it right here, dollar cost averaging can help take the emotion out of investing because you're just letting it buy over time, and you know that in the long term, this is just going to go up. So you're expecting the final result to be higher than whatever you've invested. And that's kind of how it is. So just invest periodically. I'm investing every week into Ethereum, a good amount of money, and let's just see where it goes. If it dips, it'll keep on buying from me every week. And when it goes back up, I'm already at a profit. So I think that's like the safest and very profitable and very passive way of investing, especially in such a safer coin, because no coin here is safe, right? But it's a safer coin that I think has a huge upside for the future, and I'm only doing it for a long-term hold. I'm not trying to make any quick buck. So always remember, invest what you can afford to lose, never what you can't. Don't put in your rent money or what you can what the only thing that you have to pay for your food for your family, whatever. Always what you can afford to lose every week, every month. It doesn't matter. Yeah, every 3 months. Who cares? What I think that you should do is just invest. It is a good opportunity to invest. If it goes up, you're making money. It's just that in these uncertain times, I wouldn't go all in. Now, I'm not gonna go all in into anything right now until I see a next huge dip. Until the next huge dip, I'm not gonna go all in on anything. I'm probably gonna do some swing trading, but that's a little bit more advanced now. Like some day trading. I'll put in money into a coin for like a few hours and then take it out, make some good profit. But that's something else. When you're looking into long-term holding, just kind of leave it there, be patient with it, and invest over time, and you'll be fine. So this is the most beneficial part about this, I think, is this. It not being emotional. When you see your portfolio going down, you know that you're gonna keep on buying for when it goes up, and boom, you're gonna be start making profit anytime soon, right? So I don't worry about that. And what can we expect in the next few weeks? Well, with the uncertainty, we don't know. We could see this. This is definitely an option. This is an option. This is a possibility. And that's why you need to be prepared for it. And that's why you need to follow this kind of passive way of investing. This is a possibility, or we could just go straight up from this. This could have been the end, or we could just go straight up for this. It happens. We don't know what's going to happen. This is a very uncertain moment. The only times when we know that we would go up is when we have a massive dip. Now, we won't probably call the bottom accurately, but we know that we're going to go up real soon from a dip, just like we did there. We went all the way down from 42,000 all the way up to 52,000. So a $10,000 movement in Bitcoin. We knew that was going to happen, but will we continue to see larger dips to the point where we just continue to fall down, periodically? We don't know. Will we just go straight up from here, or will we go down from here? We don't know, so we follow this very passive way of trading. That's pretty much all I have for you guys today. Please like and subscribe if you want to get this word out to a lot of other people, and if you really enjoy seeing content like this, because this is the kind of content that you get. It's real. What things are going on, what are the possibilities. I'm not going to, sugarcoat it for you. I'm not going to always be positive, because the market is not always positive. The market doesn't just go up. There will be dips along the way. And a lot of people, there aren't many people who tell you how it is. There will always be people telling you it's going to go up, it's going to go up, it's going to go up, and it'll always go up. And those are the people that go all in with the money that they can afford to lose, and sometimes even with the money that they can't afford to lose. And that's when they lose, right? That's when they lose. So don't go all in right now. I wouldn't suggest it. I'm not going all in right now. I went all in when it was in the bottom, and I've made really good profit, and I continue to take profit over time. But right now is not the time to go all in. Right now is the time to be passive, be safe with your investments, and just chill, right? Just chill, let it happen, and we'll see what goes on, right? So invest in safe coins. I'll pick any of the two, right? But mainly Ethereum. And just wait to see what happens. Thank you very much once again for watching. Please like and subscribe if you want to see more content like this. And I'll see you guys in the next video. Thank you very much.